Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew. With me is Mahima, Vachhrajani, and we'll take you through the next 1 hour of trade. But before we do, from both of us and from all of us here at NDTV Profit, here's wishing you and your families a very, very happy Dussehra in advance. And season's greetings to all of you sitting wherever you are sitting. Let's take a look at where the markets are right now. And you've had a little bit of a lackluster session so far. And in fact, you've had a pretty tight range for the Nifty 50. In fact, just about 90 points or thereabouts for the benchmark Nifty 50. Currently, we're trading below the 25,000 mark. We did break below that earlier on in the session. But just about 67, 68 points or thereabouts lower at this juncture. You have the mid-cap and the small-cap index that are also treading water more or less, not doing too much at the end of the trading week. You have the mid-cap index that's just about flat, and you have the small-cap index that's up about 0.2% or thereabouts. Earlier on in the session, you had the market breadth that was pretty much even Stevens between advances and declines. Just want to see how that is. And that seems to be the case as we speak right now as well. If anything, just about edging the advances are the declines. Let's very quickly take a look at the sectoral performers as well, just to give you a sense of what is happening. Yesterday, you had the Nifty Bank gaining 1%. Today, it's losing about 1% or thereabouts. You have IT that's not doing too much, 0.2%. Nothing to really write home about. So you have the metal index that's gaining about 1%, but the kind of volatility that you've seen with that pack makes it really, really hard to call a trend here. So let's see how this pans out in the second half of the session. And Mahima, what stocks stood out to you so far today?
A couple of stocks, firstly from the real estate and infra space. Arcade Developers came out with its Q1 FY25 numbers, which is recently listed. Yeah. And they've posted a significant growth. Revenue was up 102%. Net profit is almost grown by 4 times, more than 4 times. And margins have gone up from 15.85% to 33.5%. And the stock is zooming by 4% as we speak. The next is Cummins India, which is under pressure today. Now, this is after Goldman Sachs, which has double downgraded it to sell with a target price of 2,900, and which is a 23% downside from yesterday's closing, and the stock is currently down around 5% as we speak. The next one is Anand Rathi. Well, revenues and profits pretty much in line. Revenue up 32%, profit up around 32% as well, and they've also declared an interim dividend of roughly 7 per share. The next one is Exide Industries. Well, it has further invested 99 crores in this subsidiary, and now the total investment in the subsidiary comes to around 2,800 crores, and the stock is up around 2.6% as we speak. And lastly, Vishnu Prakash R. Pungale. It's a small company comparatively, Alex, but it's received an order worth rupees 160 from the Northern Railway, and because of which the stock is zooming in trade and is up around 3%. Right now.
But arguably one of the stocks of the day has been Bandhan Bank, and for a couple of very key reasons. Let's pull up that chart and see where it's currently trading. It was up about 10%. It continues to be at very close to the high point of the day. A couple of very key developments, among them a management change, but there are also a few brokerage notes that have come up that are positive on this particular counter. We've got Harsh joining in to tell you about the perspective here. Harsh, 2 major headwinds are behind now for the company.
Headwinds overhang, both of those behind, so clearly a big positive. One is, of course, leadership, more clarity on leadership. A seasoned leader, ex-SBI, has been Managing Director CEO at Indian Overseas Bank, and therefore brings in a ton of experience. He was also Chief Risk or Chief Credit Officer for at least 2 to 3 years at SBI as well. So therefore brings in that wealth of experience to Bandhan Bank, which currently is taken extremely positively given the way the bank has gone over the last couple of years. The second is, of course, audit of portfolio. Now, this portfolio audit has been on for a while. The bank has been guiding that they're expecting some bit of a positive reaction on the back of this. 550 crore is what will get added to the bank's balance sheet as well as P&L in H2 FY25, and that's again a very key positive for the bank. One, because their commentary has been vindicated. 2, because it just strengthens the balance sheet as well as adds to the profits and cash profits of the company. So both of those clearly positive. Jefferies constructive, CLSA 2. 240 being the target price on both of those, given by both of those brokerages. Jefferies sees a 15% ROE in this business going forward. They believe within MFI, Bandhan stands out, and in this cycle, it will continue to stand out. And that is why they are constructive. They believe valuations are also cheap at 1.1 times FY26 price to book. Valuations seem reasonable. A 20% upside even from here, Alex. So clearly, Jefferies quite constructive. CLSA 2, they're looking at it from a fundamental lens. They believe that focus will now shift back towards how the bank is going to execute from a fundamental standpoint, and that's how it should be assessed. And this news, of course, they were expecting a re-rating to happen. It's happened. It's playing out as we speak, a re-rating. And they value Bandhan at 1.3 times FY26 price to book. So that's how they're viewing it.
All right, Harsh. Thank you so much for breaking that down so comprehensively to us. But moving on today's Ask Profit, we are joined by Mr. G. Chokalingam, who's founder and MD of Economics Research, and we're also joined by Akshay P. Bhagwat, who's senior VP at JM Financial, who will give us a technical view. Are joining us on the show now. Welcome to both of you, gentlemen. Mr. Chokalingam, I'll come to you first. Your view on Bandhan Bank. It's zooming as much as 10% as we speak.
Yeah, I saw that. Definitely it's a positive development. The settlement coming from NCGT, National Credit Guarantee Trustee Company. Yes, all of us know that it has benefited to the extent of 543 crore rupees. However, the market has rewarded a 10% jump, which is, the incremental market cap is 5 times the gain coming from this settlement. Whereas, the price to book value for Bandhan Bank is around 1.6 times. So definitely the news has overdone in terms of reward to the bank. However, if you look at the fundamentals, as I said, it is trading at around 1.6 times, which is very fair. And this will add another, 3-4 rupees to the book value, this benefit coming from this NCGT. And if you apply same 1.6 times, I arrive at a target price of around 238 rupees, which is quite fair for the company. For this bank in the short to medium term. The investor should also know the fact that there has been a massive structural change in the last 5 years. You had POC banks consolidating, you had payment banks coming in, you had a lot of fintech companies, microfinance companies, small payment banks, so many changes in the structure of the banking and finance industry itself, which are not that good for upgrading the valuation for a bank like Bandhan Bank. But however, those who are holding the stock, they can hold it for, target price of around 238 rupees.
Okay, fair point, Mr. Chokalingam. Thanks so much for that view. And welcome from my side as well. Wish you both a very happy Dussehra and season's greetings from all of us here at NDTV Profit as well. Akshay, I'm coming to you for the first question today, and we've got a question coming in from a senior citizen, Anil, who's writing in from Jalandhar, and he's looking for a short-term view on Canara Bank. He's bought at a price of 109 or thereabouts, and he's looking for a view on 30,000 shares. So it's a significant number of shares that he's bought. And he is seeing a loss of about 1.5 lakhs on his trade right now. He's looking for a short-term perspective. What would you say he should do?
First of all, good morning to Alex and Mahima, and season's greetings to both of you. Happy Dussehra. Well, Canara Bank, if you look at the price structure, it's been in a consolidative mode. There's been some bit of selling in the last couple of months, but the current level where it trades is a very important support. That's the level of 100. So my sense is that there is going to be a pullback rally from 95 to 100 odd levels. And once it recovers, we need to see the strength, the delivery-based volumes, but the broader price structure from a long-term investment perspective is still strong. And I believe you should continue to hold a stock with a stop loss of around 92 at the current market price. And once the stock recovers, you can see this going way back again to the levels of 130. And this should happen within a time frame of around 5 to 6 months.
It's a hold with a stop loss of 93 at present. Well, moving on from one bank to another bank, the next query is from Manoj Kumar, who is from Mumbai, and his query is on IDFC First Bank. He's bought it at 73 a piece, and he's bought 500 shares of those, and currently his loss is around 550 rupees. So he wants a view as to what to do with IDFC First Bank right now. Mr. Chokalingam, your view, long-term view on this particular stock?
Definitely, it's a great bank, great management, no doubt about it. But then the whole banking industry is going through a lot of headwinds in terms of expected credit loss, need to reduce the credit deposit ratio, struggle for improving the deposit growth, struggle to retain the CASA deposit ratio. So this kind of headwinds, converging, I have not seen in the last 10-15 years. Even the credit growth rate has come down as compared to FY24. Now it has come down by 200-300 basis points. And I always say that IDFC First Bank has got another unique concern for a shareholder, for investors, that is, its equity base is so huge. So if it has to, emerge as like a HDFC Bank or, the Axis Bank over the last 2 decades, it's going to be a little more struggle for the bank. So therefore, if somebody is interested in a medium to long-term wealth creation, I would suggest, something like, one can look at even bank like a Karnataka Bank, and I just want to disclose that personally also I have invested, which is available at a discount. And I firmly believe that, that should be the strategy to make a lot of wealth in the medium to long term. Look for a bank where you can see some story unfolding in the medium to long term. And this is one stock which I believe can happen. It is available at a 10% discount adjusted book value. The phenomenal improvement in the net NPA, and it's 100-year-old bank, and it just this year it celebrated 100th year. So a lot of triggers are there, and also this is the only perhaps old private sector bank having a face value of 10. So if there is any split, this can create more perception-driven upgrade also. So all these are conducive. So I would prefer Karnataka Bank to IDFC First Bank.
Interesting. All right. And it's not done too much over the last few months, so it's certainly something to consider and look at very closely for the long term. Let's talk about Lemon Tree Hotels, and I'm coming to you on this one, Akshay, and this is a question from Harinder. He's bought at relatively elevated levels, at levels of 140 or thereabouts, and he's got 625 shares. He's seeing a loss right now. He's wondering what to do with the shares. Should he hold at this point?
Yes. So for Lemon Tree, if you look at the recovery which this stock has seen in the last 3 trading sessions, that's a pretty bright recovery considering the fact that this stock has been a bit choppy in the last couple of weeks. My sense is that from a long-term investment perspective, this is a very good buy at the current level. And as a disclaimer, we also bought this for our clients in a company today, and the support zone which works out from a short-term perspective is around 110. It's seen a good reversal from these support zones, and from a longer-term perspective, the chart setup probably signals that 150 is the target projection which I see in the stock from a time horizon of around 5 months, and further it may go up from a long-term investment horizon as well. So hold or buy is the recommendation in Lemon Tree. Your stop loss on this trade would be 110.
All right. The next question is from Sai Krishna, who's from Kerala, and his question is for Adani Ports. He's bought 120 shares at a price of 1,500, and his current loss stands at 10,000 rupees roughly right now. Mr. Chokalingam, I'll come to you for Adani Ports. Lots happening in the logistics space overall, as well as lot of developments with respect to Adani Ports. So from a longer term perspective, your view on Adani Ports?
Certainly, longer term perspective, one can continue to hold. If there is any significant correction, one can buy also Adani Ports, because India's growth story is going to remain intact. It is certain India will post anywhere from 6.5% to 7% growth at least for next 3 to 5 years. And second, even if our exports are not growing in a big way, the export of goods, one should remember the fact that import of goods is growing in a robust manner. And it's going to be very tough to, correct that robust growth in the imports. For any port business, when economy gets benefited only when exports outweigh the growth in the imports. But for any port business, even if imports keep growing, that is also big positive. So I'm pretty confident that our dependence on edible oil, crude oil, other energy materials, chemicals, so many things which we import will keep growing, and export also will improve. I'm not that pessimistic. So therefore, Adani Ports definitely will have a great long-term future.
Standard disclaimer here, this is NDTV Profit, part of the NDTV Group, and which is owned by the Adani Group. Now, I do want to talk about what you're seeing at the bottom of your screen, and that is the rupee. It is a record low of 84. It's breached that level on the downside. So it is actually at a record low at this juncture. But do remember that over the last year, it's been pretty range bound. If you compare it with several other currencies globally, it has hovered between 83 and 84 rupees to the dollar, where you have currencies like even the yen, for example, that have depreciated very significantly. You've had many emerging market currencies lose ground against the US dollar. Of course, in the recent past, you've seen that the dollar index itself has given up a little bit. It has lost a little bit of ground. It has come back to about 103 or thereabouts from 105 levels towards the start of this year. And all of that has to do with the change in monetary policy or the expectation of change going forward as well. Already, the central bank there has cut interest rates as an expectation of a possible rate cut even in this year, though that seems to be flagging just a tad bit based on what you saw overnight with the CPI inflation data for the previous month, which was slightly higher than expected. And so we're building in for a potential 25 basis point cut, if at all, in the rest of the financial year. There has been a reset of expectations. So all of that is having a bearing on the rupee. Of course, do remember also that the forex reserves are currently at all-time highs. They have reached that $700 billion mark. That is what the central bank governor said just this week. So the RBI is sitting on quite a lot of dry powder if it needs to defend any levels, though it says that it doesn't. And, well, that is certainly a historic moment if you're tracking that space, certainly. Let's take the next question then, and we've got IOC, which is something that moves substantially on crude oil fluctuations. I'm interested to see what Mr. Chokalingam has to say about this, because Mohit has bought at levels of 77 or thereabouts. The stock is currently at 163, so he has an incredible buy price. 1,500 is the quantum of the shares that Mohit has picked up. What do you say about the fundamentals, though, Mr. Chokalingam?
Yeah, great company, no doubt about it. The point is, if oil price goes up, refinery margin might come under pressure. But at the same time, oil producers don't get any benefit. And if oil price goes down substantially also, they miss out, the benefit. And now I believe that the oil price is likely to crash in case Israel-Iran war moderates, because despite two wars going on, two different regions, the oil price has not, went anywhere near $100. So therefore, I am a little nervous about the entire oil and gas pack. So instead of IOC, I would suggest, investor can consider Coal India. It doesn't have any impact, from these uncertainties around oil and gas. And secondly, at current price, it will give you a little more than even 5% dividend yield. And the company is also diversifying into non-coal minerals. Recently, they got approval for graphite mine. And therefore, I find, Coal India as the safest large cap PSU stock.
All right. Mr. Chokalingam, I would like to stick with you for the next question. And the next question is from Joy Sundarshi. Now, his question is quite wide. He's saying that he has 9 lakh rupees in hand right now, and he wants to park these funds for the next 3 years. And he wants to know what are the top bets, according to you, the pockets where he can invest these 9 lakh rupees.
Yeah, first of all, I am a little apprehensive that what we saw last week, in 2 days, 25 lakh crore got choked off from the overall market cap due to Israel-Iran war. So I would suggest wait for any possible attack from Israel on Iran, because the response has not come from Israel. And if you go by global media, it is possible scenario. That could be one shock. And therefore, I suggest before investing aggressively, wait for at least a week or so. And second suggestion, as per my research strategy, is that depending upon your risk profile, one should consider minimum 30% to Sensex and Nifty stock. Risk, very conservative can go up to 50% also to the Sensex Nifty, because if there is any massive shock, the DIs are certain to buy Sensex Nifty stock, but they will not come to rescue the small caps. So having said that, so I would give a few stocks, something like Reliance Industry, Coal India, ITC. These are the stocks one can consider in the large cap. And in the small and mid cap space, one can consider stocks like Nesco, Bombay Burma. These two stocks I personally invested. And apart from these two, one can consider FDC Limited, pharmaceutical company. And also one can consider Taj GVK Hotel. These are some of the stocks one can consider. But definitely, the 2-3 year story is going to be fantastic. So once this war situation moderates, then you can tilt back to small and mid cap to the extent of 70%.
And I hope our viewers have taken note. Get your pen and paper out and write down those stocks, because there's a considerable amount of research that has gone behind that. Akshay, sorry to keep you waiting. I've got a question on ITC, and this seems to be something that Mr. Chokalingam likes on the fundamentals right now. But we've got Gautam from Mumbai, who has bought 5,000 shares at a price of 265, and he's wondering what his strategy should be. He's not really specified what he wants to do with this, because he's asking for both short-term as well as long-term perspective. He's sitting on substantial gains.
See, the last couple of weeks have been a bit subdued for ITC, and even if you see the entire FMCG space, there has been some small round of profit taking in this sector. ITC has corrected, but I believe the price structure has signaled that there will be a strong support at around 480 zone. So I'm expecting some recovery happening in this stock. If you look at the broader FMCG pack today, there is some green shoots which we see in stocks like Marico or Hindustan Unilever, and I believe ITC should follow suit. So 480 is the short-term level if you are tracking levels on a micro basis, and the sense is that there should be a recovery from these levels. So in case you want to average it out, 480 is a good level. Overall, the price structure from a medium to longer term perspective is still strong. So continue to hold the stock. Once it recovers from the area of 480, the target projection would be 525 from a medium term perspective, and from a longer term perspective with an investment horizon of a year plus, you should see the stock heading for 575 odd levels. So the stop loss broadly on this trade works out to around 460, as you have brought it at a considerably lower level.
All right. The next question is from Ramakrishna, and he's bought Suzlon at 71.5, and he's bought roughly 1,250 shares, and he's sitting at a profit of roughly 4,600 rupees, and he wants to know whether he should hold or exit. Akshay, I'll stick with you for this one. What should he do with Suzlon right now?
Yes, so Suzlon has had a dream run in the last couple of years, and the sense is, looking at the price chart in the last 5-6 weeks, it is more of a time correction which is unfolding in the stock. A time correction is a phase where the stock takes a breather, stays in a range, and slowly it will come out of its shell and resume its next leg of upside journey. So here the support level for Suzlon is 70. There is a short intermediary resistance building up at 80, but the way the price structure is building up from a longer term perspective, my sense is that you will see levels of 100 being tested in this stock in the medium term scenario. So continue to hold Suzlon. The stop loss would be around 65 on this trade, and the target projection is around 95 to 100, where you should take your profits in this stock.
Venkataramani has got the next question. He's writing in from Bengaluru, and he's saying Happy Navratri to all. And I'm passing on those wishes to all of you as well. Mr. Venkataramani, wish you the very same. And the question is on Berger Paints. He says that he's making losses, Mr. Chokalingam, but he's not specified what level he bought at. He's holding 600 shares, and his holding period has been about 18 months. So he's had a reasonable amount of patience with this stock. The question is, should he continue to hold, and should he continue to have patience? And what should his strategy be on the fundamentals?
I suggest sell call on Berger Paints for a couple of reasons. One is that we have seen in the last 1 week or 1 month the oil price shooting up 10%, which is negative. In case war situation becomes slightly worse, then oil price will go up further, and they use, all of us know, the derivative of oil. This is a short-term concern. Medium to long-term concern is that the ultimate incremental paint capacity, which is going to come from Jindal Group and Grasim, is estimated to be almost 50% of the existing industry capacity. And we have already seen the paint industry losing the growth momentum in the recent time. So all this would be negative for paint industry, and therefore I would give a sell call on Berger, and I would extremely be bullish on stocks like Indigo. Yes, with the Interglobe Aviation. Instead of considering paint, one can consider airline. Yes, one can say that the oil price has gone up, but then everything else remains positive. All of us know the way the airline business is growing in a robust manner, and Indigo is maintaining its leadership position. And as I said, once the war situation moderates, there is going to be a crash in the oil price, and then everything would turn out to be positive for airline industry. So therefore, I would consider Interglobe, or for that matter, even stock like MRF Limited. Because natural rubber price in just 2-3 weeks crashed around 40,000 rupees per ton, which is not much noticed by many investors, which is a big positive for tire companies like MRF.
All right, Mr. Chokalingam. So basically, sell call on Berger Paint. So if you want to play that rising of oil prices correctly, then you're supposed to bet on the airlines, is what he's saying. But viewers, it's time for a quick break. We'll be right back on the other side in a few minutes.